Is there a scenario where the XRPL increases in market share of tokenization and potentially SWIFT transactions, and the XRP token itself does not appreciate in price? XRP and its value proposition is to facilitate transactions. You could absolutely issue stuff on the chain that wasn't traded, but there's not a whole lot of utility to that. Right? Like the whole benefit of tokenization is for those assets to be easily exchangeable and swapped between, like I was talking about, tokenized deposits to a money market, to your stocks, to your private equity, to your real estate. You would want all of those things easily transferable. And that would be the whole point of creating a tokenized representation of that value or real world asset. So the hard answer is yes. The real answer is, why are you going to do it if it's not traded? And if it's traded, it's going to increase the price of XRP because the network itself has a decentralized exchange built in, and it's going to route payments through the most efficient, fastest way to do that. And over time, as there's more value in XRP, it will be XRP that it will be routed through to be able to settle that payment or exchange those two tokenized assets. So I don't know if that answers your question specifically. I try to be pretty specific about it. You know, like, yes is the answer. Just tokenizing it isn't going to cause it, but the trading of those assets once they're tokenized is going to cause significant price appreciation if there's enough liquidity in XRP to be able to facilitate it. We're going to have to drive XRP to a value of around $100 before SWIFT and some of these other parties can really utilize the asset and settle through it, because at that point there'll be enough liquidity for them to be able to do so. And that mechanism I've described, you know, through the domino theory and the ETFs and all of the other global macroeconomic events that will lead to the adoption of the asset and the higher price that we're all hoping for.